Welcome to the Confident Host podcast with me, Kay Gibbs. If you're a holiday let host or co-host looking for more bookings, more efficiencies, and to get ahead, then you are in the right place. Each episode brings you practical tips, real stories, and expert advice. On today's episode, I welcome the lovely Helen from Maple Tree Services, who is a tax accountant, a fellow host, and an expert on all things tax for holiday lets. She's going to be spilling the tea on the ways that we can make sure we're getting things right by tax and a few ways that we might be able to save some money too. So let's get started. Hi everyone, today we are talking to Helen, who is from Maple Tree Tax and Accounting and who you might recognise as someone I've worked with before. Helen's got so much useful tax info to share with us today. It's definitely going to be a good one. Before we get into it, Helen, I'm drinking chamomile tea as always. What have you got today?
Oh, I've got a good old cup of builder's tea.
I love that. Love that you tried to make it sound more exotic. It's builder's tea.
It has to be. I don't drink. Yes, no Earl Grey for me.
No, straight up builders. Brilliant. Okay, so Helen is, as I say, from Maple Tree Tax and Accounting Services. And Helen and I first met almost a year ago now when she wanted some support to move onto Airbnb with her holiday cottage. So she's a holiday let owner like the rest of us, as well as being a tax expert. And I was your mentor for a little bit of time when Ted was very little. And since then, we've collaborated on a video that you might have seen about capital allowances that you can find. And I'm sure we'll put the link to that here. And we're going to talk a little bit about capital allowances today, but not for long. So Helen, that's sort of a bit about how we've collaborated. Tell us just a little bit about your business and you and how you've come to be where you're up to now.
Oh, well, I have been running Maple Tree for, I think it's 13 years now. And I think we've probably had this conversation before. I started when my children were very little and the business was quite small. I came from my background was capital allowances, which I'd got into originally I was a surveyor and then I became qualified as a chartered tax advisor, and it tends to be surveyors and chartered tax advisors who specialise in capital allowances.
Yeah.
Like
That's
those,
the holy, the triptych of wonder in Helen is the surveyor, the tax advisor, and being a holiday let owner. That's the wonder of you, Helen.
I'm just wondrous, yes. But my practice actually wasn't in capital allowances, although I've always done a little bit sort of on the side. My practice has always been personal tax because I just love working with people, and lots of capital allowances historically was working with big companies who had big commercial properties, and I just like working with people. So it was kind of really great when I realised actually I can be doing capital allowances with people on their furnished holiday lets, but also still do their tax returns as well. And then more recently, the business has expanded and I have people who work for me and we offer accounts and we have payroll and VAT as well. So we offer corporate work as well. So the business has grown quite a bit recently.
That's brilliant. So obviously, well, perhaps not obviously, tax matters. We might not like it, but it matters a lot. Obviously, we've got to work within the law, and that's the kind of downside. And when we come to the theme in a second, you'll be very much checking us there. But also there are potential things we're missing that we might make gains where we're overpaying or missing something that we can claim for or whatever. So the theme, as has been for this series of podcasts, is what your tax accountant would tell you if they weren't afraid of hurting your feelings. So these, Helen, are the things that you hear people say, or maybe you see people say on Facebook or social media, and you think, oh no, that's not okay.
I have to say, Kay, when I hear people say these things, I actually can't, I have to correct them because some of these things are so bad.
So this might be, I think there's going to be quite a few things that are things that you're like, absolutely don't do that. But there's also a couple of things that maybe we're missing that can be, you're going to give us a positive, that we might be missing out on. So that is the theme for today. And I think, Helen, you're just going to dive right in and start telling us the things that give you that toe curl.
First thing I want to talk about, it's very exciting, is capital and revenue expenditure, which I think people get really confused as to what is capital expenditure, what is revenue expenditure, and which they can claim as a deduction from their profit. So revenue expenditure, you can claim. Capital expenditure, you generally can't claim. We'll get onto this a bit later, unless you've been running your holiday let before last April, and you might be able to claim capital allowances on some of it, not all of it, but some of it. Basically, you've got to think capital can't claim, unless it's capital allowances, revenue can claim everything. And then what are those two things?
Yes,
So
please.
capital is the things when you buy to set up your business. So you're buying your property, you're buying your mattresses and your sofas and your carpets and your blinds and your kitchen equipment, and your sheets and towels. That's your capital equipment that you buy to set up the business. You can't claim that when you set up the business, although you might be able to if you have set up your business before April. We'll get onto that in the capital.
Yeah, okay.
Any new owners, you can't claim any of that. Capital is also improvements you make. So if you put an extension onto your property, or you put a new bathroom in where there wasn't a bathroom before, or you significantly upgrade. So say you had a really basic, kind of slightly crummy kitchen, and you put in a beautiful marble worktop and a top of the range Argo, and you've massively upgraded it.
Yeah.
Then you wouldn't be able to, you've not replaced what was there before. So that would be capital expenditure. But revenue expenditure, things you can claim, are all your running costs. It's your electricity, your council tax, or your business rates, your cleaning, your laundry, your rubbish collection, maintenance, housekeeping. This is something people might sometimes miss out on. It's if you're doing maintenance or housekeeping visits yourself, you've got maybe mileage that you can claim.
Okay, great.
From the property. Your advertising, your agent commission, things like training fees. If you go on one of Kay's courses or join her confident host circle, you can claim that as part of your training. It's part of your business expenses. And even some of your accountancy fees, you can't claim for the actual tax return fee, but generally an accountant will need to review and prepare your business accounts, so that element can be claimed for.
This is an aside, Helen, really, but obviously one of the roles that you have when you're being people's accountant is to accurately record everything and make sure that they're doing it accurately and legally and so on. Is part of that, is one of the benefits of having an accountant. Obviously, one is that you don't have to worry that you've got it wrong. For me, that would be the main kind of, but is another one that you can say, hang on, you haven't considered this, and hang on, you haven't considered that. And actually, there might be some tax savings to be made through your familiarity with the business.
Absolutely. Generally, furnished holiday let owners are quite savvy, and generally they put everything down there, and there's things on there that can't be claimed. But obviously, if there's like no insurance on there, or I can see that if someone's mentioned they've been on one of your courses and I hadn't seen that the expense there, of course, it's something that can be highlighted.
So that's another benefit, really, isn't it? So already we've got some positive and some negative there. That's all good. Anything else that you see? Oh, actually, I know there's one coming up. This is one that I see discussed in Facebook groups particularly, which is about whether or not we should be paying tax on the agent fees, whether that agent is Airbnb or Sykes or whoever it is. Tell us a bit about that.
Yes. So when you state your income, you need to state the income including the agent fee. So what the guest pays the agent. We'll talk about Airbnb. That's slightly different, but basically it's what the guest pays the agent. And then you deduct the agent fees as an expense.
Yeah. And this can be really important if you're on a threshold or near a threshold, can't it?
Well, if you're coming up to the VAT threshold, you may be underestimating that you should be registered for VAT because you're not including the agent's fees in your turnover.
I think that's massive.
And it would be very critical. We can talk about making tax digital in a minute. That again looks at thresholds. If you're not stating your income correctly, you could be in trouble there.
My feeling, Helen, is there'll be quite a lot of people going, hang on, I need to rewind that. Because I think there's quite a few people that think you can just state the income that you actually receive after those fees. So I think that's critical.
You need to include the amount the guest pays, apart from, this is where it's a little bit more complicated, if it's Airbnb, and there are two elements to the Airbnb fee, aren't there? Well, how you set it up, I believe.
That's right.
There's a fee that the guest pays to Airbnb, and then there's a fee that you pay to Airbnb.
That's right. And this is one of the reasons that sometimes people debate. There's two fees, as you say. There's a simplified fee and a split fee. The split fee is, as you'd expect, split with the guest. And then the simplified fee, the host pays all of it. There's benefits or otherwise. I've discussed this with people in the past about which one you choose. But it's certainly, if you're close to a VAT threshold, then you would want to choose the split in order that the guest fee is then not included in your income. So that would override any kind of nuanced decision about which one to go for if that's the situation that you're in. Yes,
absolutely. But equally, I think if you have got the split fee, you need to be careful not to include the bit that the guest pays directly to Airbnb as part of the fee, because that's nothing to do with you. That's not to do with that's a contract between Airbnb and the guest.
Yeah.
Whereas the fee that they're paying, the fee that you're getting is what they're paying for you, including what you pay to Airbnb. It's a little bit confusing, but
yeah, no, got it. And I think, I do think that'll be a revelation to some people listening. Okay, so another thing then, Helen, that our tax accountant would tell us if she wasn't afraid of hurting our feelings. I'm braced. Go on.
Well, there's one thing that comes up all the time in some of the Facebook groups, the holiday let Facebook groups, is about their own time, about your own time. If you're cleaning the house yourself, and quite often I see laundry, people are doing the laundry themselves, and they're saying the laundry service would charge, I don't know, £20 per set or whatever to do it. So I'm just putting that amount in. You can't do that. You can't do that. You cannot do any deduction for your time, because the profit of the business is your reward for the time. And obviously you've got to pay tax on the profit. So if you just make a deduction for like £20, okay, some of it will be the electricity and the washing powder, but you're then making a deduction for £10, and that £10 isn't being taxed by anyone. So you can't do that. What you can do is make a deduction for the washing powder and the electricity that you're using to do the laundry, but you can't make any deduction for your own time. And I see that again and again. People are just putting an allowance in for the laundry and for the cleaning if they're doing the cleaning themselves, and you cannot do that. You will not be paying enough tax, and you could get into trouble.
Yeah, I suppose now you've said it like that, a really clear way of thinking of it is someone needs to pay the tax at some point. So whereas if it was a cleaning company that you were paying that money, they would then be paying the tax on that income. That's the point. Whereas if you're not then moving it and paying yourself, no one's going to pay the tax. Yeah, that makes sense. That makes sense.
The only way you could do it is say, well, I'm a cleaning company myself, and actually set up a whole new trade on your tax return, declaring that it's got to be declared somewhere. So you just don't take anything out of your time. You can take it out for the electricity and the washing powder or the cleaning materials or the new mop, but you can't take it out for your time.
Yeah, understood. Thank you. There was a little one that came up. So I have a group on Facebook, which I am very proud of because it is the kindest hosting Facebook group there is, I'm proud to say. And recently someone suggested we did a holiday exchange post. So I put something up for people to say, I'd like to come to Cornwall, and I'd like to go to the Cotswolds, and I'd like to go to Aberdeenshire, whatever. And you spotted that and you said, okay, there's something people need to know. So go on. What else would our tax advisor like us to know if she wasn't afraid of hurting my feelings?
Sadly, that's taxable. So you need to bring into your tax return the market value of what you've received. It is taxable if you exchange properties. You've got to bring in the value of that property that you've stayed in as part of your taxable income.
And that's like the going rate, as in what any other punter would pay for it.
Yeah, absolutely. Yeah. And there's just one other thing I wanted to mention before we get on to, I think, talking about making tax digital, which is just about keeping really clear records over time and keeping them year on year, the whole time you own your property, as to what you've claimed as revenue and what is capital expenditure that you've either claimed capital allowances on or you haven't claimed any tax relief at all on. Because I see it all the time when it comes to people selling the property and we're doing their capital gains tax return. They don't really know. They know they've spent money this year and that year, but they don't know what's already been in their tax return. And you can't claim against capital gains stuff that you've already claimed as revenue. So it has to be capital expenditure, and it can't be things that have already been claimed. Although I've sort of said there's quite a clear distinction between what is capital and revenue, sometimes it can be a bit grey. So you just really need to keep those records really clear as to what's been claimed and what hasn't.
Yeah, thank you. That's really useful.
Hello, folks. It's just me coming on to interrupt me and tell you about Confident Host Circle. It's my subscription group, a membership for hosts just like you who are looking to take what can be something of a lonely sport and bring community to it. Inside, you'll find community, training, inspiration and support to feel confident in your hosting and in your business. Each month we enjoy a theme where there will be training, both things that are quick fixes and also bigger, more strategic ways of building efficiencies into your business and just getting more bookings. Confident Host Circle is all inside a private Facebook group where there's a really lovely community of like-minded hosts, as well as the training and the chance to chat and ask questions and so on. We have a monthly live where we either meet up together or you guys get the chance to ask me anything. At its heart, it's about consistency, community and confidence. and I would love to see you there. You can find out more at www.kgibbs.com/confident host.
All right then. Making tax digital is something that is looming. I think like lots of changes have come for us. Making tax digital is another one. So tell us a bit about what we need to know.
First thing is, it's not scary.
Okay, that's good news.
I'm
That's
in the
good news.
pilot, and I've done my first submission, and
Brilliant.
it was fine. It was
Okay.
fine.
You've got to remember though, Helen, you are a literal expert. So just because you found it fine, the rest of us might
Well,
not.
I can do it easily. Well, not easy. I
Oh,
can do
there
it
you
for
go.
everyone else,
There
but
you go.
yeah,
You can do it for everyone.
it was
Everyone
fine.
who's listening.
So it's starting next April, and people who will be brought into it from next April are people whose qualifying income, and that's self-employment plus their property income, is more than £50,000. And that
Right.
£50,000 is going to be, they're going to look at the 2024-25 tax return. So it's the one that you'll be working on. You may have already submitted it, or you'll be submitting it between now and January. It's that tax return.
Yep.
They'll be looking at the income, not the profit, it's the income, and looking at adding together anything you get from self-employment and property and seeing if it's more than £50,000. And if it is, from April, you go into making tax digital.
A question on that, is that property as in holiday let property and or buy to lets? Any buy to
Yes,
let?
everything.
Both.
Yes,
Okay.
yes, all going into
So
that.
that's going to affect a huge amount of people then, isn't
It
it?
will do.
That's
It
it.
absolutely will do. And then those limits are going, the following year it's going down to 30,000, and then the year after it's going down to 20,000. And I believe the ultimate aim is to go down to 10,000. So everyone, it's coming for everyone, but
Yep.
don't be scared of it. It's
That's an unusual turn of phrase, Helen, but don't be scared. It's coming for you. Don't
it's
be scared of it.
what it means is from next April, instead of just doing your tax return once a year, you have to do 4 quarterly returns online, and all your records need to be kept digitally.
Yep.
So what will happen is the first return, and this is the one because I'm doing it a year early. The first one has to be in by the 7th of August. So that's the one I've done a little bit early because I didn't want to panic on the 7th of August. So then you do 7th of November, 7th of February, 7th of May, and then a final declaration, which is basically like the tax return, which brings in any other income you've got. That's where you claim any capital allowances if you're eligible for them. There were just about various adjustments that go in the final declaration. If you have like bank interest or dividend income, that would go in that final declaration. So you do your 4 quarterly returns, which would literally just be your income and your expenses on an accumulative basis. And you need to keep that information either on software like Xero, or Hammock is one that is specifically designed for landlords.
Okay.
There are some that come, Free Agent is one that comes with certain bank accounts. So if you bank with NatWest or Metal, or I think it's Royal Bank of Scotland, you can get Free Agent for free.
Okay.
There's another one that's very cheap, which is called QuickFile.
Mhm.
I think it's free, but then if you want to connect your bank account to it, it's a little bit, but not as expensive as Xero. Or you can still use Excel, but then you use bridging software to connect that to HMRC's portal.
Okay. Is
You
that paid
can-
bridging software or
It
is
is
that
paid. Well, at the moment, some of them are free because the companies are trying to get people like me using them.
sure? Yeah.
The one I used there will be charges next year, but the one I used is free at the moment for people who are already using their software.
Of those, obviously there's a charge and that matters, but to so many of us, our time spent doing this sort of thing that's hard, if it's hard for us, is going to outweigh any potential cost. So which of those that you've said would you recommend as a kind of easy to use, simple, going to save time option that you've tried so far?
So far, I'll tell you exactly my experience. I have two submissions that I need to do. One's for my furnished holiday let, and the other's for self-employment.
Yep.
I wanted to do one with Excel and one with Xero, so I could fight, and I
Great
completely
idea.
failed to do the Xero because I couldn't get it to connect up. But usually
Okay.
Xero is brilliant. So I was just trying. It was Saturday night when I was doing it, and I didn't want to spend hours online with the Xero help people. So what I'm going to try and do is do my different submissions with different, which might mean I've got to keep duplicating all my records, but I just want to have a good idea of what's going to work. I would say if you're using Excel and you're happy with Excel and you're prepared to pay for someone to do the submissions, or you don't mind paying for the bridging software, that's probably the easiest to use.
So if because that would be me, I do it all on Excel at the minute. So if someone is already set doing that in that flow of using Excel, you would say just pay your accountant to do that bridge. Because can
Yeah.
they have the bridging software for you?
Yes,
Yeah.
yes. What you can do, you'll be able to buy the bridging software
Yeah.
yourself, but
Okay.
it'll probably work out. They haven't released all their pricing yet, but it will probably work out cheaper. Well, the accountants will be able to get the software cheaper because they'll be able to probably use it for quite a lot of people.
Yeah,
Although
of
people are
course.
paying for their
Yeah.
time. So,
Yeah.
but then you've got the reassurance that someone's reviewing it and making sure it's
Yes. Yeah. Okay. Okay.
I love it. I love Xero. I think Xero is great, and I would probably recommend Xero, but because I haven't actually managed to get a submission working with it. But I use Xero for making tax digital submissions, and it's easy and straightforward. So
Brilliant. Okay,
but
so there's
Xero-
options. Actually, what we're saying is
option.
there's
Yeah,
some
but
good
Xero
options.
isn't specifically designed for landlords, whereas Hammock, which I haven't tried yet, is. So, and I think it's just a question of if there's a free one available, like with your bank account, use that one.
Yeah, okay. They're all much of a muchness. Is
They're
the
all
message
much
I'm
for
getting.
muchness, and there's always really, really good YouTube videos about how to do it.
Okay, that's a
So
great
if
tip
you're
too.
happy
Thank
to
you.
just Google and look at YouTube, there'll be someone showing you how to do it.
Brilliant. Thank you, Helen. Okay, so the other thing that definitely an expert with the triptych of skills that I mentioned earlier would want us to know if she wasn't afraid of hurting our feelings, and indeed, maybe this will really please some of us, is all around capital allowances. And this is something that's a hot topic. And I've had people comment and say, oh, no, it's over now, it's finished. So I think the first thing to address RE capital allowances is the sort of timescales, who should consider it, and why it still matters for a short time longer.
If you were running your holiday let before April and you qualified as a furnished holiday let in 24, 25,
Yep.
we might have just opened, it's quite a nuance here, but if you just literally opened in March, but in that first 12 months of trading, you meet the holiday let criteria, then you would be qualified as a furnished holiday let for that tax year.
Got it.
You can still claim, so that's tax returns that people are doing now.
Yep.
You can claim capital allowances in. And not only that, you can still go back to the year before. If you open the year before, we can go back to the year before and do an amendment to that tax return and claim capital allowances. We've still actually got until 31st of January 27 to make a claim.
Yeah, because of the amendments that you can do.
Because of the amendment windows. But you must qualify as a furnished holiday let, or must have qualified as a furnished holiday let in 24-25 tax
Got
year.
it. So there's no more room to kind of enter this club, but there is still room to
claim.
if
Yes.
you're already in the club. Got
Yeah.
it. Okay. And who does capital allowances apply to? Because something we've said before, Helen, is there is a vast majority of the people who it may well apply to who just don't even realise, and there could be thousands of pounds on the table for them. So tell us, who could it apply to?
To make it kind of worthwhile doing a claim, you probably need to have spent at least £150,000 on purchasing your property, or 20-30 plus on a refurbishment of your property. Otherwise, it's just the cost, the actual tax relief that you might get is not worth. It's quite a big exercise to do the work. You won't get any benefit from it.
Yep.
And we're looking at, so the kind of categories you need to be thinking about if you bought your property. And the things that you can claim the allowances on, things like the bathrooms, the kitchens, the heating and the electrics in the property. So when you bought your property, if you had all those things on your property, which you probably did, you potentially could claim allowances on the value of all those things in the property. But it's not just as straightforward as saying, a bathroom would cost this, a kitchen would cost this.
Yeah.
There's a big exercise about working out how much you paid for it, what the value of the land was, what the value of the rest of the building is, and working out what proportion of your purchase price relates to those things.
And that we will put a link to the video that you and I have done before where there's a lot more detail in that. And essentially, that's why your surveying expertise is so important in combination.
Absolutely. But what you do need to do is you need to have been using those things in your business. So if you bought a dilapidated old house with all these things in, but ripped them all out, you haven't been using them in your business. So you can't be claiming on those things. But you presumably putting in new things in, and the new things that you put in, you can claim on.
Yeah.
However, I think more accountant, if you're already using an accountant, they may have already picked up on all the new things that you've put in. They may have picked up on the new kitchen and bathroom, the boiler and heat. They may claim for that already. So the first thing, if you're in that position where you've refurbished a property, is to see if your accountant, or you might have claimed on it, to see if that's already being claimed on. Because if that's the case, there's no further claim to be made. You've made the claim.
Understood.
But if you've bought a property, it's a little bit more complicated than that, because you need to check who owned it before, but if, say, it was in residential use before, it will probably be unrestricted, and therefore and you're still using the kitchen and the bathroom in your property. So when I say residential or brand new, you would be able to make a claim. If you've bought a previous furnished holiday let, then you probably won't be able to make a claim. It would, because it's the legislation is quite complicated, and the person before would have
they've had that chance.
made it. So it's a little bit complicated. If it's been residential or brand new and you're using the kitchen and bathroom heating and electrics, or most of them that you bought it with, or you've used it for a bit before you refurbished it, then there's potential for a claim there.
And so people can book in. We haven't said, Helen, it's really worth getting in touch with a specialist for this, because it's something that your average accountant, it's a different skill set and a different set of knowledge, isn't it? That's no disrespect to other kinds of accountants. It's just a different thing.
Yeah, they won't be able to do the reconstruction of the building, the valuation of the land, and put it all together, and the apportionment formula for HMRC.
And this is something, folks, that Helen does do, and we will again put her contact details here so you can get in touch with her, because, as I say, she's also a holiday let owner, so she really is the dream for kind of knowing the ins and outs of this business. I asked you because I thought there might be some doom and gloom, and in fairness, there's not been much doom and gloom. It's brilliant. Cheery tax.
I spin it so well.
I asked you if we could finish with 3 actions that listeners should take right now that they should go away and do. They can stick on their to-do list for this week and crack on with. So hit us with your 3 actions.
So number 1, check your situation, check your 24-25 tax return to see if Making Tax Digital applies to you. And if it does, start thinking about how you might want to keep your records. Number 2, make sure you're updating your records on a monthly basis, because at some point, whatever your turnover, you're going to come into Making Tax Digital. And if you're getting into the habit of updating your records every month, it's just going to be so much easier. It's not going to be a headache. It's going to be simple. So just, I don't know, I get there sometimes. I'm thinking, I haven't updated my spreadsheet for 2-3 months, and there's a big panic, and I'm looking through my bank statements and credit card statements.
That's going to be a real plus, I think, for me of Making Tax Digital, is there won't be that scrabbling around for receipts when you're trying to remember what was what, months and months later. Actually, it will make you do it more frequently, which is a good thing, isn't it?
It's a very good thing, and it's going to be more accurate. You won't forget things, because a number of times, I know there might be a maintenance trip, and I've just completely forgotten that we did it, and I haven't logged the mileage. So I think we'll probably claim more that we're allowed to claim, because we're better at keeping our records.
Yeah.
Finally, contact me if you think you might be able to claim capital allowances, or you want to appoint a tax advisor to handle your self-assessment, or your corporation tax, or your accounts, or if you want a tax advisor to handle your Making Tax Digital submissions.
Yeah, brilliant. I think that's so worthwhile doing. And you can get with Helen, not on the capital allowances side, but on the ongoing tax affairs side. You can get a discount should you mention that you've reached Helen through me, and I do get a referral fee. I only do that with people who I absolutely rate, as you know, and I hope, I'm sure anyone listening can see what an expert you are and how valuable you are as an asset to any business. Helen, that has been so revealing as ever. Every time we speak, I learn something new, and I really appreciate it. So thank you for your time and for being here. As I say, we'll put all Helen's details with the podcast here, and I'm sure I will chat to you again soon.
Thank you for having me.
Thanks for listening to the Confident Host podcast with me, Kay Gibbs. You can find more episodes wherever you normally get your podcasts and on YouTube. Make sure you subscribe, follow, and share away with fellow hosts. You can also follow me on Facebook, where I can usually be found, and also on Instagram for lots more tips and discussion. And if you would like to take your hosting journey further, join me in Confident Host Circle, my membership that brings you consistency, confidence, and community while you grow your business. On the next episode, it's me going solo and telling you about my Airbnb experiment, which took me 15 months to conclude and came out with some really interesting results. See you next time.